Thank you. All right, I'll call this meeting of the Durham Board of Selectmen to order. Please stand for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay, all board members are present. I have one amendment to the agenda at suggestion of Selectman Josh. A good suggestion. We're going to move the consideration of the consent agreement up to the next item to consider, so that if we vote to sign it, we can let our town clerk go home and she doesn't have to sit around and wait for us, because she's the notary that has to witness the. In fact, Milt, would you mind telling Jessica we're going to do this right now? Thank you. So that I have that. Any other amendments to the agenda? Oh, thank God, she says. Okay. All right. All right. So we're going to move number 5 up to after number 2, actually, in between 2 and 3. Okay. So this is, this is a continuation of the conversation we had, a couple weeks ago now, where we have a resident who's trying to sell their house, and it was determined in the course of trying to prepare for the sale that it was discovered that I believe it's the front of the house violates the setback by 3 feet. Is that right?
It's a little bit more than that.
Okay.
It's
8
5
feet.
It's
Well,
8 feet for the porch, I thought.
Right.
3 feet for the house.
It's approximately 8 feet
So it's 42 feet from the road instead of 50 feet.
from the road. So not property.
Not from a neighbor,
Right,
from the
not from a
road.
neighbor.
Right. And they're basically they're looking for this a no action consent agreement that, that if down the road they have the new owners have a neighbor that maybe they're not getting along and they realize that they're violating the setback, they can't go and make a big deal of it and get any sort of judgment from the Board of Appeals, because we will have signed this no action agreement. So
Pretty straightforward.
yep. Does anybody have any questions about this?
I don't have any questions, but I would like, moving forward in the future, that we somewhat figure out exactly what the proper channel, because there have been other people in this town that have had these issues come up, and they've had to go through a lot more than just getting a consent agenda.
Yeah, I don't know what that. Yeah, I mean that's a good point. It depends on if somebody's
depends on how it's
contesting it,
presented,
or
right?
like where it comes from. But
Some people have had to go. For example, most recent one I can think of was a subdivision that was, in an area. A house was built in an area that was kind of like this. It was in a setback. Period. They had to go back to planning board. They had to redo maps. It was a pretty big expense. Where this, we're just kind of waving the magic wand, which I'm fine with. I'm not trying to.
I hear you.
But there should be some type of outline of how we proceed.
Yeah,
in the future.
then that's a good point. So it's maybe something that you can work with George and Alan on, like when we run into a situation like this where we have a setback issue, what is the proper process for reviewing that? Like, should it go to the Board of Appeals always, or only in certain situations, and what are those situations? Almost like a little process flow and how that should happen, just so we make sure, to Rich's point, that everybody's getting the same treatment.
Right. If you notice in your packet that the codes enforcement wrote a letter of no action.
Yeah, I understand that, but quite frankly,
right.
that's not really an appropriate thing to do. as a
Right,
code
I get
enforcement officer. It's not, that's above his authority.
Right, right.
And
He can write a letter about
He can write what his concern or what his
Recommendation,
recommendation, but
right.
he shouldn't be given a free pass either to anybody. There should be, most towns have a proper channel that you have to go through, whether it's a residential, a commercial property or whatever, that you have to meet certain criteria, and maybe the burden is too big to make a correction, and that's usually what's found, and therefore it would go before select board and so forth, and they would say, okay, because the burden is so big, we're not going to enforce this, but it shouldn't be just a wave of a magic wand. Like I said, some people have had to go through planning boards, they've had to hire attorneys, they've had to get engineers. I've seen it just from a developer standpoint. I've seen it in this town for a residence that's right up the road from my house. And I've seen other times where it's just sign a piece of paper. There should be something set forth this is the proper procedures going from here on out.
I had to once, it was years ago, I had to move lot line, a roadside lot line, go to the planning board, have it all resurveyed for 16 inches. 16 inches.
So what actually happened here again? Sorry, I missed the beginning part of the story on why did this was a brand new house that just went in that neighborhood?
It was, but it was purchased by some folks. And now they're selling it.
Yeah.
So it's the same setback
But-
that was,
But when the neighborhood went in, how is it that it got located in the wrong spot?
that's a good question.
The mortgage inspection.
I guess my guess is maybe they paid for cash for the house. Code enforcement typically does, unless it's so blatantly like, whoa, that looks really wrong. Doesn't go out there and pull measurements and all that stuff. That's not atypical. So when you go to resell that house, the person that's taking a mortgage, the bank will come in and say, hey, such and such mortgage survey company will go out there and say, hey, you're in the setbacks by 2-3 feet and you don't meet the town.
Title company should
You
go.
know, I get that, but that was a planned neighborhood, correct?
Yeah, but it's kind of a moot point at this point, right? You know,
I
I
know,
mean,
I
that
get
would
it. I
be
just-
worth fact finding, like kind of offline, so it
Offline,
doesn't
yeah,
happen
but-
again, but.
And
It's
so,
always, it's gonna happen, is the point I'm trying to make. These things happen. It's irrelevant how it happens. It's just what's the proper channel to take when it happens. This is all my argument. This is not even an argument. It's just, we should really have something for the public.
Yep.
I was gonna make a similar suggestion, and my question also had to do with the $200. Did that cover the cost of the lawyer? All the other time, I mean, and to me,
Cheap money.
that,
That's cheap
Well,
money
I
for
mean,
this.
your cost,
That's
this
cheap
is
money
cost.
for this situation.
I'm pretty sure it didn't even cover the town's costs.
No,
The
but
printing, with the lawyer, with other stuff. And so that's something I think that needs to be taken into consideration. But that's, again, this has been presented and so I'm not gonna throw a fit for this one. But if it's something that continues to happen,
Well,
That's-
would it be appropriate, I mean, to get a hold of the selling party or someone and say, our lawyer looked at this, we'd like to be reimbursed for our services?
Then we need an amended agreement and it's 2 more weeks and, you know,
They really don't sell.
they're
Yeah.
holding up the house
Yeah.
really for, I think there's a couple of things here that I
So
think
they
are
can change.
learnings for the future, but don't necessarily need to stop this.
Yeah, I'm not in favor of stopping
Right.
this whatsoever. I think they waited long enough. We just need to define a criteria moving forward of what this board feels comfortable doing when these situations arise.
we're following the one that's in place.
Or following we should have a policy,
Yeah.
right?
Yeah, and then, and then when, maybe it's a fee that's not on, that should be on Alan's radar, or whoever's, working on the fee schedule, should be that, like, any document furnished by us that needs review by council is
Time and material, time and
$1,000 minimum, whatever it is, if it's, if
Well, I don't-
attorney needs to review.
I'm sure
it.
Jack charges a lot, but I don't know how he puts on 1,000.
I don't know, I just, just making up a number.
And my point is that the planning board has, I believe, regulations to go and prevent this from happening. I guess that's kind of why I was like, how did we get in this situation to begin with? Just curious.
I don't think the planning board does much once the vellum sign, it's kind of out of the planning
No, I
board.
get it, but it's, yeah. Just thinking back to when we were on the board.
House envelope should be.
Yeah, it should have been there, clear as a whistle. It was
Okay.
close, but
All right, so does anybody want to make a motion here?
I'd move that we sign the consent agreement.
I'll second it.
Any further discussion on this? So the motion is to sign the consent agreement regarding the setback for the property located at 10 Wingate Farm Road, book 11170, page 18, in the Androscoggin County Registry of Deeds, AKA the Benner property. All in favor? Okay. We all have to sign this while our town clerk is here, and then
Just one copy, right?
All right. So next on the agenda will be public comment. If anybody here to make public comment? Seeing none. Okay. All right. I'll wait till we finish signing this so we don't step on Mr. Roy as he wants to talk.
Thank you.
Great. Jess, thanks for staying.
Thank you, Josh.
Thank you.
Thank you.
Okay, next on the agenda, oh, nice, agenda. It's been a long day. Is Mark Roy is here from Barry Talbot Royer. Please come on up, have a seat at the table. Mr. Roy is going to speak with us. Jerry reached out to him about, about the concept of perhaps contracting out some of the duties that have typically been associated with the deputy treasurer's position. And so he's here to tell us a little bit about the service, and we have an opportunity to ask questions and just have a conversation about it. So yeah,
Yep,
please.
sure.
Go ahead.
So as you said, Jerry had asked for me to put together a proposal. This is a service that we started providing to schools and towns around the state about 6 years ago. And currently, we're still the only CPA firm in the state that does it. It's basically, there's two core services that we provide. There's the AP processing and the payroll processing. But then on top of that, there's higher level services like helping the town with budgeting, helping the town manager put together a CIP budget, answering questions about, financing as far as like if you want to take out a loan, if it makes sense to take out a loan, does it make sense to lease, does it make sense to just buy it outright, et cetera. So we leverage pretty much all of our financial management expertise. I have a master's degree in financial management, and then as well as our expertise with our other clients, right? Our experience that we get through our other clients, our other governmental clients, and then our general governmental accounting experience to help make sure that the town is meeting its requirements for accounting for the funds, the public funds, in a responsible manner. So I mean that's the high level service. We provide it on a fixed fee basis, so every year it's just one set fee regardless of how much you use, right? So the way I generally have been gauging these is I take a look, meaning to provide a proposal, is I take a look at the town's level of activity, like how much are you processing for AP, how many payrolls are you doing it weekly, bi-weekly, how many employees do you have, fire department employees, which usually is, odd, right? Some towns do it quarterly, sometimes do it semi-annually, sometimes towns do it after so many calls, et cetera. So all of that factors into my cost, which is pretty much labor costs, right? Me and my staff. And then I come up with a proposal for a fixed fee, and if I get it right, then that's good. If I get it wrong, usually there have been times, especially early on when we first started it, and I didn't really have an understanding of how much work goes into this, where I significantly underbid it. But lately, I haven't had any issues where I bid something and then the next year I got to go, geez, I really got to up the fee. That hasn't happened lately. So in general, the fees just kind of go up 3% just so I can keep pace with labor costs. And then that's the kind of the general idea of the services. And I could probably answer anything that really you guys have questions about specifically that you might have.
Yeah. Who wants to start?
What's the name of your firm?
Barry Talbot Royer. So we're down in Falmouth. Barry Talbot Royer has been in Falmouth for the last, I don't know, I think it's been in some form since early 1900s. We started this business, so we're a full service CPA firm, right? My partner and I are CPAs. We have 8 to 10 CPAs on staff, something like that. For this service, there's 3 CPAs and then there's 3 staff. So there's 6 staff that manage these accounts. And we're a full service firm, so we do, tax prep and, outsource CFO services for, nonprofits and for-profit businesses. And then we also do audits and reviews, and we have been doing governmental audits for decades, right? And so that's kind of the traditional model for CPA firms, is that's kind of what you do, right? And audits, municipal audits, well, not all CPA firms do that, because you have to have kind of a subset of knowledge. You have to have not only FASB knowledge, which is the Financial Accounting Standards Board's standards that you audit again. You also have to know GASB's standards, which are Governmental Accounting Standards Board's standards. And so of all the CPA firms, there's really only kind of a handful that do GASB audits, governmental audits. And from a business perspective, they're pretty nice to have, because they're perennial income that you can pretty much count on, because schools and towns are required to have an audit. Whereas, if you do an audit for a nonprofit, sometimes they need an audit, sometimes they don't, depending on it. And then businesses haven't really needed audits unless their creditors require it. So, so the governmental audits is a nice, business to have. But what we had found is, or what I had found actually, and I'm sure others do too, but what irritated me about audits for governments, especially small and medium-sized governments, is you would go in one year, audit, propose all these adjustments, right? And when you propose adjustments, that's basically saying your books are out of order, right? You're not keeping track of what you're supposed to be keeping track of, right? Propose all these adjustments, clean up the books, and then the next year come back and it's the same adjustments over and over and over again, right? And it's because small and medium-sized towns, and even some large towns, generally just don't have the resources to hire professionals, and also they don't want to raise taxes for it. So what they ultimately end up doing is they just say, okay, well, we'll hire whoever wants to apply, and we can't really find anybody who's qualified given what pay range we want to pay, and so now we're just hiring anybody who just kind of raises their hand. And so often you get people who are not qualified at all to manage the books of government. I mean, if you think about it, I don't know how much you guys raise in taxes each year. I mean, what is it, $5 million, $6 million a year, right? $8 million a year. And you hire a CFO essentially who has no experience to manage an $8 million entity. I don't know any private entities that would hire somebody with no accounting experience, no specific accounting experience in that industry to manage those books. And yet here you are with public funds, $8 million. Okay, anybody want to take this job? And then every year waiting for an auditor to come in, take a look at the books, propose dozens of adjustments, and then go, okay, well, I guess we're good to go until next year, and not really have any idea. So that irritated me about doing the audits. The other thing that irritated me about it is when you propose too many adjustments, at some point you're essentially auditing your own work. I'm no longer independent because I'm doing all the work for closing the books and cleaning them up. And so I didn't like that aspect of it either, because audits, you're supposed to be independent. An audit should be the finance director says, here's my financial statements, and my job as an auditor is to say, okay, let me see some evidence, and I will render an opinion on whether or not those financial statements are fairly stated. Not, here's some unadjusted, an unadjusted trial balance. I haven't gone through any of the accounts. I haven't, made sure that they're all right. Why don't you, as the auditor, go ahead and clean it all up? That's not an auditor's job. It's not supposed to be. But for this industry, that's what the accounting firms have gotten into the habit of doing, because they're like, well, I'd like to have the annual income, and so we'll just help out our clients as much as possible. And we're constantly brushing up against that independence line where we're like, I'm not supposed to be doing all this work.
Can you give a sense of like for the accounts payable operation, like what is a typical, I don't know if the time frame is a week or a month or whatever, what does the typical workflow look like? Like what's the town sending you? What are you sending the town? Like, what does that look like?
Right. So the typical workflow for AP is the town collects all their invoices. If they have department heads, then their department heads go ahead and sign off or review the invoice to be paid, right? Make sure that
Do we have to assign where it would be posted at that point? Like which
Account
line
codes.
of the account
Yeah,
codes?
right.
Okay, yeah,
Yeah.
okay.
I
Yep.
mean, unless it's obvious. I mean, you don't need to write down the account code for electricity if it's a CFD.
Sure, yeah.
I already
Yep.
know that's what, right?
Okay.
But some things like, hey, I want it to go to this account. And then usually, especially with recurring bills, it's not anything that we need to
Right,
know about or we need to verify. But yes, in general, they'll initial it, they'll code it, and then on an AP week, the town will scan them, upload them to our servers, right? Use SharePoint. Then my staff download them, we code them, we prepare the AP warrant, we send out the AP warrant via DocuSign for you guys to review. Then you can review it at you can review it individually, sign off on it individually, and then if you wanted to bring it at the select board meeting to actually have it part of your public vote, you can do that. But once we get the majority of signatures, then we go ahead and we cut the checks and we send them out, and then we keep everything on file. So in case you ever need to look at it. So for example, we have towns where we've done them for the last 4 or 5 years, and so we have all of those invoices for the last 4 or 5 years on file that we can pull up at any point in time.
And then and then payroll is where's like the system we use now, I'm sure, is like Trio. So is that still part of the picture if we were to go with you? Or
Trio is still part of the picture for the property tax module and the
Yeah.
cash receiving module. Every day people come in paying their taxes, paying
the
excise
counter
tax,
and all that
yeah.
stuff. Yeah.
So the revenue side module is still Trio. You can still use Trio. For the payroll module and the what they call the budgetary module, you wouldn't need that anymore. So you pay those separately anyway. I think the budgetary module is like $1,000, $1,200 a year, and then the payroll module, I'm not really sure, but I think it's another $1,000 somewhere in there.
So
The big price tag for Trio is really the property tax module.
Okay.
So after a while, you can just shut those off. You don't need them. I mean, you pay for them for a year anyway. So whenever your subscription renews, you can always just say, well, we don't
So-
need that anymore.
So you just mentioned SharePoint. You guys use SharePoint. So
Yeah.
this office would be logging into that. Would they need SharePoint licenses?
No. It's just a drag and drop.
It's just a drag and
Yeah,
drop.
I send you a link. It verifies who you are, and then you can drag and drop the files.
What kind of IT security backend do you have?
On our end, well, we have 2 servers that are remotely located, right? So one's in Boston, one's in Dallas, wherever. We have normal security encryption as far as like making sure that all of our files are encrypted, backed up. We have a data recovery center in case anything, some sort of, disaster happens, like one fire goes down. And we might be out for, an hour or so, and then we're back up live with backup data, and everything is basically mimicked. For security, it's really just your standard encryptions that you're going to find on Microsoft 365, which is the primary software that we use. So Outlook or SharePoint or anything like that.
So pulling from Trio, that's done.
So we also use Splashtop, which is just a commercial off-the-shelf software to remote into the town. We send a link to whichever computer that the Trio is on, and then we remote in, and we establish a login for Trio. We pull whatever reports we need, which is really just the revenue reports and the property tax balance reports, because we reconcile the property tax balances every month. And then we just bring those over onto our server.
So after this goes on for say like 4 or 5 years, how portable is the data?
It's
Like if the data is owned by the town, how does that get transmitted back? What kind of file
I
structure
can
is that?
literally put it on a thumb drive so the file structure is done by fiscal year. So on our file structure, we have, FY23, right? And then we're going to have revenue subfolders with different types of revenue documents in there. We'll have expenditure subfolders with different types of documents in there. Any sort of contracts that you guys enter to, we usually get a copy of those just so we have those on file. Because the other benefit of this is when it comes time for an audit, really the auditor is just working with us, and we are just sending stuff remote as opposed to having them come in and have to scan stuff. It's already all been scanned. So what happens with the auditors is usually they send us a link, right? Like, I don't know who you use RKO, right?
Yeah.
So RKO, they will just ask for stuff for you guys to send it online, and it's really literally just a very quick turnaround time for me to grab whatever they need and send it up. Usually what I do when I prepare for the audit, because I'm already closing the books and making sure everything's adjusted, so that by the time I'm finishing preparing the financial statements, as opposed to waiting for the auditor to prepare the financial statements, which is what you do right now. So I prepare the financial statements. Then once I'm done, I send the financial statements along with pretty much 90% of what the auditor is going to request anyway. Because for these small towns, it's pretty much all the same stuff. You need your bank statements, your bank reconciliations, you need reconciliations of your tax receivables, you need AP items, you need supporting documentation or schedules for any reserves and activities from your reserves. And so I'll send 90% right off the bat. And then when they start actually doing the audit, then they're really just doing kind of random selections of expenses and revenues that they want to see support for, which I won't know until they ask. They'll send me a list. Hey, can you send us a list of all these things? Grab them, turn around, send it off to them. So for most of our clients, they don't even really have to do anything on site, right? They don't actually go out to our clients. There are some auditors who specifically like to go out on site. Like, I have some auditors, some of my audit staff, the older staff, that prefer to be on site just because that's how she's been doing it for. She's been doing it for like that for 25 years. So she wants to keep on doing that. And I'm like, all right, whatever. I don't care. But for most auditors that we work with, they don't really need anything other than the electronic format. And the benefit to the town and to the schools are that, well, you're no longer waiting for an auditor to clean up the books to know what your fund balance is, what your financial statements look like. You already know what they look like because I've already cleaned them up. And now at that point, the only benefit of the audit is a second independent party has looked at what I've done and says, yeah, it's pretty good, which is exactly what an auditor should be. It shouldn't be an auditor coming in and cleaning up the books.
So using SharePoint as the back end as well, or just?
No, the back end is our own. The SharePoint is really just the medium to transfer the files.
So then Oracle Access, what are you guys using?
I'm sorry?
What are you guys using for a back end? Oracle?
Oh, you mean for
Access?
the accounting software? We use QuickBooks right now. So QuickBooks is that what you meant, right? Accounting software?
Storage of the data is, you're going to be pulling reports out of, you can pull them out of QuickBooks.
Yeah, I mean, it's just a local server,
Okay.
in, I don't know, Explorer, I guess is, right? Whatever Microsoft's
Yeah,
filing system.
I don't think it's a scale of like an SAP kind of
Yeah,
thing.
well,
That's what you're
I'm
asking.
just trying to figure out,
Yeah.
when you get the data, it's like, how are you going to get it, right? If you were going to make it portable for something else,
Right, so I mean,
The file format, does the
yeah,
data
what
come
file
in?
format does it come in?
so
and,
I'm gonna be doing this entire process right now with one of my existing clients. We're gonna be terminating the services, which is fine, right? And then right now I'm gonna be like tomorrow I have to meet with their newly hired treasurer to meet with her and say, okay, well, this is what we've been doing. Here's the QuickBooks software. If you want to use your own software, that's on you. But here's the QuickBooks file, which has all of the
all the data.
accumulated data, and then all of the invoices, all of the historical data is pretty much PDF, Excel, and Word documents. That's pretty much it.
That's fine.
There's no specialized documentation or specialized software that we're using. It's all pretty much business standard. Yeah.
So for clients that are using you for accounts payable and payroll, what, if any, financial treasurer, whatever expertise is like left behind in the town office that you need somebody able to do? Yeah, anything?
As far as expertise,
Well, I mean, or tasks, like what,
well,
what's left?
you always need the statutory treasurer. So
Right,
we're-
right.
this job is not for me to be the treasurer,
Yes,
right?
that's a state requirement, so.
I'm not authorizing any payments. I'm not, doing, I have no
Right,
authority to make those types of management decisions.
Right.
That's- The treasurer's making the decision, the select board's making the decision. All I'm doing is facilitating
Yep.
actually getting the process done, right? As far as expertise at the town, well, that's the entire point. The entire point is you guys really don't have the expertise, and
Right.
we're helping you, just like you don't have legal expertise and you hire a lawyer.
Right.
For activity, what you need to do, we need at least somebody here, one person here to collect the time cards, because the payroll process is essentially the same thing. Collect the time cards, any sort of updates, I-9s, W-4s, anything like that, scan them up into SharePoint, we download them, we process the payroll, send
Yeah.
out the payroll warrant, all that.
Yeah.
So it's essentially the
Okay.
same process.
Okay,
But we need somebody here at the town to be able to do that.
Yep.
So there's always at least a part-time person, right? Or some assistant, like
Yeah.
Greenville, it's, the town manager is also the town treasurer. He has an assistant who essentially scans everything, sends it up. Every payroll and every AP.
Yep.
And every town and every school has that. They have either some assistant or some part-time person or whatever.
from, when you enter into a contract with a new client, what does the ramp up period look like to get to the point where you're doing it? We're sending you everything and you're doing it. How?
It depends on the town or the school. It depends on the client, how complicated their system is. So your system is not particularly complicated, meaning complex.
There are a lot of people that would beg to differ.
Right, but I mean complex. Like there's not a lot of complex accounting that has to
Yeah,
go on.
right. Yeah.
But yeah, the ramp up period. So when we have a start date, for the engagement, that's when we start to actually, okay, well, we need to come to the town. We need to gather a whole bunch of historical data,
Mhm.
just because I like to have that on file, because that's going to help inform me on how
Yep.
to set up your the accounting charts of accounts in the software on my end. And then we set up we spend time setting up the chart of accounts, getting to understand the reserves, anything special, basically.
Yep.
And it can take, I tell clients, it takes anywhere from 2 to 3 months, depending on your complexity and also kind of your willingness of the staff. Because I have run into with a couple clients where they were not willing, and it basically just delayed the process, right? Because they were just not on board with it. So I've now learned my lesson. I avoid that. I only want clients where, everybody's pretty much on board. I don't want clients where, everybody's on board except, the administrative assistant who's been there for 20 years. They're never going to fire him, and he just doesn't want to participate.
Yep.
So, like for example, right now, we just had a client where we onboarded them. We started the contract January 1, and we're going live with their AP. They're just doing AP. They're not doing payroll. We're going live with them on next Tuesday is their county commissioners meeting.
And until that point, they still had to pay their bills. You did.
Yeah, right. I mean, basically, whatever they had going on before we showed up, they continued doing that. And then once we go live, then they really don't have to do anything. Usually, what we find is for the existing staff, they're kind of repurposed, right? Okay, well, you're now freed up from having to do what you were doing, and now you can do this.
Yep.
In situations where really we're being asked to come in because somebody retired, somebody quit, somebody was fired, and they just can't find anybody, which is the majority of the time.
Yeah.
They kind of limp along until we can get going.
Yeah.
What kind of checks and balances, like when you first start up and kick it off? There's
Yeah.
gotta be some checking back and forth to make sure everything, I'll say, is accurate between your team and the office team.
Yeah. So for normally what I do is I just take whatever you have in Trio up until that point, and I just incorporate it into QuickBooks. So now I essentially have the similar, the exact same data. I really literally just reformat, import it. And then at that point, after we start going live, then my next kind of phase is to clean up anything that I need to clean up so that you guys can.
Like things that got paid during that week of
Right.
transition.
Yeah, right.
And stuff like that.
And then in general, I mean, we have general, checks and balances where with the AP, I really just have the clients fill in a quick list. I give them an Excel template that says, okay, in addition to scanning up all the invoices, I want you to just type out, the vendor name, the amount, and the expense code on this Excel list, because what we do is I want to make sure that everything that you think you've scanned and sent to me is I've received. So in addition to scanning all these invoices, I have this additional list and I can compare it, right? And say, hey, you have on this list that we were supposed to pay, Almighty Waste. I don't see an Almighty Waste invoice. At that point, we ask you for invoices. We say, hey, did you need an Almighty Waste? Or it's, oh yeah, well, we didn't, I did that by accident. We were going to pay it, but we're not paying it.
And that's part of the standard process, not just the ramp up, or is that?
No, that's part of the standard process
Okay,
once we
yeah.
get on. The checks and balances really for whether or not we've gotten all the data
Right. that's-
is really just me grabbing the Trio data year to date, up until that point and incorporating it. And then it's really just on me to kind of compare, okay, well, if I pull a report in Trio as of the last date that you guys started doing it and look at it in QuickBooks, I really just do that kind of comparison.
Sorry, go
Yeah,
ahead.
no, that's it.
Any other questions on payroll or AP? Because there's a couple other subjects I wanted to ask about, but I want to clean this
Yeah, I
up.
just had a question on this is exactly what Kevin just said, the AP and the payroll. In regards to the liability end of it, more particularly with payroll and payroll taxes.
Yeah.
How do we work that out? For
So,
example, you're writing the checks, or you're doing the electronic deposits, or are we doing that?
no, we use, again, we're still using QuickBooks. So QuickBooks has a payroll module.
Okay.
And it's all direct deposit, unless you guys have some employees that want checks, but whatever. But then Intuit is the one that is pulling the net payroll out of the bank account and is doing the direct deposit. So they're actually doing all of that direct deposit stuff. Then we go online to the federal website and Maine's website to remit the federal and state taxes. And then if there's any payroll liabilities, like to Maine Municipal Employees Health Trust, to Maine PERS, to unions, whatever.
Your company would be the one that's
We
doing
cut
the
those
federal
checks.
filings and so forth. and
Oh,
cutting
yeah,
the
yeah,
checks.
yeah. So we take care of all the payroll
And that's
processing.
fantastic. So in regards to the AP, and exactly with that, are they your checks that you get an account?
No, they're yours.
There are checks, and you would be a signature, or
No,
would we
you
still be
guys are
signing our
no,
checks?
you guys are a signature. We do use an electronic signature. Basically, whoever is the signer on the account, we scan their image of their signature.
So we don't get the hard checks for us to sign and then
No, you wouldn't get the hard
disperse.
checks. No.
Okay.
I mean, we can do it whatever way you want. The way we're doing it now is designed to be as efficient as possible. So I do have like this new client that I just onboarded. The county administrator is like, well, I don't know if the commissioners are going to want to do a DocuSign. Okay, if you don't want to do DocuSign, that's fine. I'm going to do the exact same process. I'm going to scan everything to you.
Sure.
You just have to print off the warrant, have them sign it, scan the signed warrant back to me, and then I'll cut the checks. Or we could just do it through DocuSign and I'll get a notification automatically. I don't care either way. It's really how you guys want to do it. And the same could happen with the checks too, if you wanted to physically sign them.
For unless we pass a specific ordinance, we have to sign the warrant in a public meeting. All of us here,
Right.
we can't sign them individually
Right.
unless there are ways. There are things we could do to enable us to the future board to do that, but we don't have that right now in place.
Right. So other towns, right, you're exactly right. I mean, you basically have to say, okay, well, how are we going to meet the public meeting standard?
Right.
And so some of our towns, they enact an ordinance or policy. I don't know. I let them deal with that. I
It's
said,
as
however-
simple though as you sending us the warrant, printing it off, us signing it, and then tomorrow morning someone sending it to you.
Yeah, could be that.
Yeah,
If you want to
yeah,
say.
Yeah, that's what I'm
It's
thinking. too.
not-
Or it's,
I'm
The other ones
I was more
simply
concerned
do-
with payroll taxes and things like that. 'cause
the other
you're
ones
on
simply
control.
do an announcement at the town at the select board's meeting. So the policy is, okay, whenever they do an AP warrant, the town manager will read at the public meeting how much it is and whether, and either they do a vote or whatever to
Yeah.
approve it.
Yeah.
But it's basically, they come up with some way to meet
Okay.
their requirement to meet the public standard.
All right. So, thank you. Did you have something, Josh?
No, I mean, the only thing that I noticed was we currently do weekly payroll,
Mhm.
and this would go to bi-weekly.
If you want, I mean, we can do weekly, it's just, that just drives up the cost.
More
because
money,
I have
right.
to do everything twice as much.
Right.
'Cause payroll is pretty much take the data from the time cards, enter it into the system, make sure everything processes. Well, if it's, 2 weeks worth of payroll, I only have to do that half the time, right? So it takes me half the time. So there's a reduction in fee if you want to do bi-weekly. If you do single or every week, we can do it.
All my other questions were answered.
Okay. I wanted to step outside the AP payroll for a minute because
Sure.
you said some things in your introduction that definitely piqued my interest. One of the things that we're wrestling with as a town as part of our capital improvement process is, we've got a pretty good schedule. Like we kind of know what we will need to do over the next several years, or at least what department heads are saying we need to do. What we don't have is the financing plan for that. Like, for instance, what should we be setting aside for reserves versus planning to raise in taxes versus leasing versus financing?
Right.
Is that the type of thing that somebody from your team could help us figure out? I'm assuming it is, but have you helped
Right.
towns with that type of thing before?
Oh, yeah. I mean, so it depends first on what the town's preference is, because different towns are different, obviously.
Sure, yeah.
So some towns like to, well, we'll just borrow everything and we don't really have reserves. And then there's other towns, and my personal, preference is, well, just raise it and save it and set it aside. And when you need to buy it, buy it.
Right.
Right now, the towns, the capital improvement plans that I help with towns is say, okay, well, get your department heads together, have them think really, like as far out in advance as possible. And then we put it into basically an Excel tool that, it shows the cash flows in and out each year.
Right.
And then the idea is to raise as level an amount each
Right.
year to either pay for, to both pay for whatever cash flow is coming out that
Yeah.
year, plus also setting aside so that your reserve balance is always sufficient to maintain that kind of even flow.
Yeah.
So you don't have these spikes and dips.
Mm-hmm.
But again, that's only as good as how well thought out your plans are. So if you
Right.
already have that in place, then it's pretty easy to figure out, okay, well, you just need this, right? But it gets updated too, right? So for example, Town of Greenville, which we had put together this CIP plan, and so they were raising, I think it was like $400,000 a year, $500,000 a year, pretty steadily, right?
Yep.
And then they're like, well, we need a new public safety building, which we're going to borrow from the Maine Municipal Bond Bank for that, which then I go, okay, well, if you're going to do a 15-year level payment or 20-year level principal, here's what that would look like. Put it into the spreadsheet, say, okay, now what's the new level that you have to kind of raise for every year, even before you get the bond, because they even haven't gotten the bond yet, right?
Right.
Or issued the bond. So last year's budget included that, but it did mean that there was a spike from the prior year. But then after that, try to keep it as level as possible. So it depends on how far out in advance you can plan.
Okay, great.
But we help with all of that.
Awesome.
And then it's really kind of showing you your options, and then
And then with the written policies, you'll go through the written policies and procedures and.
so, right. And that's as robust as you want it or not, right? I mean, a lot of times people go overboard and it's like, well, you're putting in a lot of work for something that doesn't have a lot of risk, right? So I do kind of talk with the town managers and the select boards, like when you're figuring out what your policies and procedures should be and those related controls, you really should be thinking about, well, what's the likelihood of something happening? And if it happens, what's the likely impact of it happening? Because that's going to kind of dictate how much effort and cost you want to put towards controlling for it. Because you can't control for everything, and not everything is worth putting all of your resources towards it. So you want to, and you don't have unlimited resources anyway. So you want to kind of manage those resources to attack the highest risks first. The biggest risk that I see for most clients is cash handling, obviously. And most clients don't have positive pay, or most towns and schools don't have positive pay. So that's one of the first things I kind of tell my clients. We definitely want positive pay.
Positive pay.
So positive pay is where you're basically sending the bank a list of all of your checks and the amounts and the vendors, so that they have a list before the checks come in that they compare it to. And if it doesn't match, they don't clear the checks.
Oh, okay.
And that's a
Yeah.
huge thing, because it's easy enough. If you've ever gotten a check from anybody, you know what their bank routing number is, you know what their account number is, you know what their signature looks like.
Mhm.
To create a fake check is not particularly
Right.
difficult, right? And so presenting it at a bank, some bank, is pretty easy if they don't know who you are and that you don't have positive pay. All of a sudden that clears. Now banks in the past have been saying, well, we'll cover that for you, but now banks are like, we'll cover that for you once.
Yeah, right.
If you don't get positive pay after this, we're not covering it for you the next time it happens.
Okay.
But you said you already have it, so that's great. So that's one big control I see. And then other because there's not much, in terms of theft, when you're thinking really about theft, other than physical assets like trucks and stuff, which that's not anything I'm going to help you with. But when it comes to financial assets, towns don't really have anything other than cash, right?
Right.
Cash, maybe some CDs and stuff. And basically we're going to focus on the controls for that.
And with Greenville, didn't they start out with a negative undesignated
Yeah.
fund balance?
Well, that's the other thing we help you out with. I mean, we help you out with making sure that you have a good fund balance, and that you guys know what your fund balance is, because, often you don't know what your fund balance is because you're waiting and waiting and waiting until some audit is done
Right.
before you even know how you did, at the end of last fiscal year. So it's 6 months down the road, 8 months down the road, you're already through budget season.
Yeah.
So for Greenville, I mean, the first year that they hired us, it was me and the town manager actually got hired at the same time, right? They hired a new town manager. They didn't have a treasurer. So they said, well, you're going to be the treasurer, but we'll hire this firm as well. And when I started doing it, it was like, this was after they had already done their new fiscal year budget, because we started at the beginning of the fiscal year. I was like, this is a couple months into the fiscal year. I'm like, you guys budgeted to use 150,000 of your fund balance, but going into the fiscal year, you already had a negative fund balance. You don't have it. So they were like, oh, we didn't know that, right? And the reason why they didn't know is because they didn't have good accounts, right? They didn't have anybody that's managing it. So with good management from the town manager, where he's like, I'm not going to spend as much as they approved to spend at the budget. Over the last couple of years, it's now a healthy fund balance, 1.4 million or something like that.
One of the things the town is starting to think seriously about is transitioning from our current calendar fiscal year to a July to June fiscal year. And one of the things that's been called out about a switch like that is that when we actually are reviewing the budget, that we wouldn't necessarily be reviewing the budget after the previous year is complete. So we wouldn't have actual, right, because that's typically how it is. You don't have full LY actuals. So when do you help provide like projected end of year, like, based upon, whatever, like this is what it's looking like and this is what you would use as your projected LY number? Okay.
Exactly. So, and actually it was funny. So I'm from Lewiston, and Bill Webster was the superintendent at Lewiston schools.
Yep.
And then he happened to be a treasurer at one of the school departments, the town school departments, smaller town school departments and so he had been doing this, and he's a finance guy. He knows everything. He's like, why the heck are you doing these projections? And I'm like, Bill, it's because he's like, we never did these projections for Lewiston. I'm like, yeah, Bill, this town doesn't have the resources to just say, well, whatever we had for a fund balance last year is good enough for us to help design what our budget is going to be this coming fiscal year, right? So what I do for the schools primarily, and then even the towns, is we just say, look, your fund balance at the end of last fiscal year, June 30th of last year, was X. We know what your revenue is so far. Let's do a projected annualization, right? We're halfway through the year, just double it.
Yeah.
We'll get a kind of a good idea. And then as the budget season goes on, we usually update that number as we get closer and closer. So that at least we can say, look, especially if you have a very tight fund balance, which schools do because they're limited by state statute to have a really you can't have, now it's 9%. But it used to be you can't have more than 3%. It's like, holy crap, 3% of your prior year expenditure, which is really tight.
Yeah.
So I was dealing with, a school department that had $100,000 of unassigned fund balance, but, a $2 million budget or a $1 million budget. I'm like, holy moly, this is really tight. So having that projection of, well, where are we going to be at the end of this fiscal year so that we can make a good decision on how much do we want to budget to use of what will be the existing fund balance at the end of the fiscal year.
Yeah.
Without that projection, you're pretty much just going, I don't know, I guess we're good.
All right.
That's what I do.
Well, you've got such a big fund balance, Todd. You can do that, right? All right. Any other questions? Thank you. This has been very, very informative. And did you have any questions for us?
No. I mean,
Like a job interview. Do you have any questions? for
No,
us?
I've talked with Jerry. Basically, he said that whenever we could, if you guys approved it, basically whenever we could start up, we would. And I told him I probably wouldn't be able to start until May 1, meaning that starting process, which means we probably wouldn't go live for a couple months after that.
And does that mean like if within the next few weeks you can start May 1, or what if it's a month or two from now?
So this is the thing. So I have right now I have 3 different towns that are asking me for these to kind of all start right away.
Yeah.
And because it's kind of a haul and I have 6 staff, right? It is a haul for a lot of work on the front end to onboard them.
Yeah.
I'm trying to stagger them so that I can reasonably attack each one.
Yeah.
So basically I tell each client, look, whoever kind of says yay first, that's the one I'm going to go with first. And then
Got it.
probably 2 months after that, 3 months after that, I'll be able to onboard another 2 months, 3 months. So,
Okay.
So it's really up to you guys. And then I'll try to get it done as, onboard you as quick as possible. Right. I mean, just because I say 2 months, it doesn't necessarily mean it'll take 2 months. But,
Sure.
I try to onboard you as soon as possible, but slotting you in is really just what clients do I have coming on board? Because I've gotten a lot of interest in this
Sure.
new line of business, and I'm actually surprised that there's one other CPA firm that I think it has the competence and probably the ability to come in, enter the market, which he hasn't done it yet. But I wouldn't, be surprised if all of a sudden he starts bidding on these types of services. But yeah, I've gotten a lot of interest partially because of the labor market is what it is. You can't find anybody, even qualified people. And then on top of that, people are just.
How's your retention been?
Our retention has been actually pretty good. My partner was just out at a conference in Las Vegas with a whole bunch of different accounting firms, and we're the only firm that we were like, well, we've been able to hire and maintain. We've actually just hired a new member for my staff, and I had the freedom to let one of the staff members go. So I just hired somebody probably 6 months ago, and he wasn't working out. So I'm like, look, I can't be keeping somebody on board. But normally, when you can't find anybody else, you kind of make do.
Yeah.
Well, I haven't had to do that lately. So our retention has been pretty good. We do try to make an effort to make sure that Barry Tavil Royer is a place where people want to work, because we are a smaller firm. And so the wages that we can pay are not comparable to what they can get at like Baker Newman Noyes or Barry Dunn or something like that. So we have to make sure that the kind of the work is interesting, and the work-life balance, all of that.
All that stuff. Okay, well, thank you very much.
Sure.
I appreciate you
Thank you, Mark.
sharing some time with us. Thank you. Okay. Why don't we just, digest that and then we can, put it on next week's agenda for further discussion?
Sure.
That sound all right to you guys? or-
On the 28th. Yep.
All right. So next on the agenda is the town manager's report.
Okay. Well, business as usual, just a couple things. Maybe some of you know, but over at the Eureka Center, during that cold snap, some pipes burst.
No.
Not a whole lot of damage, but it's all repaired. It's all repaired now, so.
Was it because the heaters were not on, or why did they freeze?
The only thing on was the heat pumps, and I don't think it was enough.
That's all that's over there, isn't it?
Yes.
Yeah, it wasn't enough.
Sometimes
They
heat
were on.
pumps, even the newer ones are only good for like -20.
Right. So that when okay, so that's,
I think it's -40 in there, you might need to build a fire or something. A trash can fire, whatever you gotta do. but
Plenty
I'm
of
saying-
scrap wood up on the
Plenty of
second
scrap wood. But I mean, they are, that is their kind of.
but it does call out, are there certain, if we know we're gonna get a cold snap like that, are there precautions we should we be draining the pipes, when we know something like that's coming,
And maybe put some styrofoam around them.
whatever it is, something mitigate it somehow, because Rich is right. I mean, those systems are not built for 49 below zero.
We were lucky that it got caught when it was still frozen and didn't thaw,
Yeah.
because then water would have been going everywhere.
Yeah.
So
caught
now, I'm not sure. I think they fixed it with PEX. Calvin would know.
Hex has a lot more flexibility.
Yeah,
resilience.
I think that's what they fixed it with.
I mean, some of those cold areas, they're usually the same areas, so you could, a cheap way sometimes is you could incorporate some heat tape on those particular areas. You could also just offset some of the heat in there with a little space heater when you know it's gonna dip into like the -20s or something of that nature.
Shut the
Yeah,
pump
we didn't
off.
know
Shut the
until this
pump
time.
off, so like pump.
Yeah, you
stuff
probably
first.
wouldn't know. This is the first time. we've
Yeah,
had
first
that
time it's
happen.
happened, right, so we.
Quite
and
frankly,
it
my
was
guess is
really,
it would have
really
happened
cold.
with the old furnace that was.
Oh, sure.
Yeah, probably.
Especially when it was in the middle.
Well, those old Empires, the BTUs on those are not
Yeah, bathrooms on the other end of the building.
in that square footage. anyways.
Maybe we should be thinking.
Okay.
Yeah, and then the only other thing is we're going through the audit right now, so it's
Yeah.
pretty,
Oh, yeah.
it's pretty busy. Auditor was here last week. She's coming back tomorrow. And just like he said, they just ask for random stuff and they want to produce it. And some stuff they couldn't find, but we have since found it. But it's a lot of work to satisfy the auditor on what we do. So it's been pretty busy in here in that regard.
That's the type of thing where, if we had that service, then
They
that
take care of
becomes
it.
a lot easier in the
Yeah.
future, right?
Yeah. It's, for me being new to it, it's unbelievable what they ask for, like, myself and Jessica and Cindy have to fill out a fraud report, and just all kinds of things that I wouldn't have imagined doing, because, municipalities that I work for, the finance director took care of that.
Yeah, right,
So
right.
It's, I was surprised at all it's like 27 different items and pages and reports. And
Yeah.
it's quite a bit. She brings an assistant with her, so hopefully she's coming back on Thursday. Hopefully that'll be it, and hopefully within a month or so, maybe we'll have a report. But she is going to want to talk to one of you folks, probably.
That's
you,
standard.
yeah,
Every year she does that.
Yeah.
So
She
you
just
see
reminds
anything
me.
suspicious?
Right, exactly. That sort of thing. So,
Yeah.
but other than that, it's all systems go. Everything's going pretty well, actually.
Right. Good.
So,
Good.
yep.
Anybody have any questions for Jerry?
Yeah. Jessica's out next week, and I know there was a note, I think, on the website about not doing the vital records.
Right.
And I don't know if there's another way to get that out to make sure people
We
know.
put it on News Blast, put it on our website. Yeah, she's going.
But
on
if there's like
vacation.
a sign on the front door or something, because I feel like next week, school vacation week, there's gonna be more parents home. Some of that stuff might
Yeah,
be.
we can make better.
A lot of that stuff you can do online, but still there's some stuff they're gonna.
And I have to keep your powder dry on that shotgun wedding.
No trips to Vegas.
Right.
Accountants in Vegas.
All right, is that it, Jerry?
Yeah, that's all,
Okay.
that's pretty much all I got, yeah.
All right, so next on the agenda is our vote, our formal vote on our recommendations for the budget. All right, so the budget committee met, and I'm going to go through kind of where there were differences. And then, we have Neil and Milt here if we need to get clarification from the budget committee on anything, on why they did what they did. So, and guys, if I misstate something, jump in if I get something wrong. So starting with administration, the original amount requested 559.15. The budget committee's recommendation reduces that by 15,000 for they identified the contingency line as something they weren't interested in funding, and then they took half of the line that was in there for election payroll. The reasoning being that 22 was a big, state election year, and 23 is not big state or federal election year, so there would be less need for that payroll. And then moving down there, 9380 includes $1,500 for a sign at River Park. Jerry had previously identified there's a River Park project fund that has money in it that potentially could be used to fund that, but it's kind of 6 of one, half dozen of the other. Funded out of recreation, it's is a possibility. Then Public Works, this was the $16,000 we were talking about at the beginning of the meeting. Our current number is 1,322,920. The budget committee's is 1,338,920. That's $16,000. That's the Calvin's late amended request for some additional money, mainly because of gas expense, I believe it was. Solid waste. Remember when we knew that our solid waste number was a little fuzzy when we because we didn't have the final thing from Casella, which we then got it, and budget committee, actually kudos to them, good catch. They figured that the budget figure here should really be 6 months at the 22 rate and 6 months at the 23 rate, not a full year at the 23 rate. So that basically is $20,000 higher than what ours was. And then on the capital expenditures, they're recommending 50,000 in public works reserves instead of 100,000. And then over on the tax impact side, in terms of the amount of undesignated funds used, I have 230 in there as our number, but our number was actually 200 initially. That was before we knew about the 16 for the gas and the extra 20 for solid waste. So going into the budget committee meeting, I told Jerry, I said, well, my recommendation to the board would likely be to add that 36,000 to the undesignated fund appropriation and fund it that way. And so that's what he communicated to the budget committee. They didn't want to be quite that aggressive. And so they settled on a 230 number for undesignated. But other than that, those handful of things I just went through, our budgets are pretty much
And
in
the
alignment.
Public Works Capital Reserve,
Yeah, I mentioned that, didn't I?
did you?
Yeah,
Don't you
they're
specify?
calling for 50,000 instead of 100. Yeah. So one of the things I wanted to bring up was, and I don't know, Jerry, I don't know if you want to add anything to this, but Jerry made the pitch early on in the budget process that it'd be great if the select board and the budget committee went into town meeting like in alignment and like 100% alignment, not just close. And it basically, the theory being that, the budget committee and the select board, who are much closer to these numbers and the thought process behind them than you could ever really realistically cover at town meeting. That the interest of the town might be better served if the people that are closest to it are kind of having that back and forth conversation, and then we present a united recommendation to the town. So that's part of what we would discuss tonight, on whether we want to simply match what the budget committee did in these areas, or if we want to go to town floor with variances. So I guess I would open that up for discussion. Anybody's got any comments there?
So I think my question would be the sign, that $1,500. Is that something that you determined couldn't come out of that designated fund? Because I thought we took that out initially because it was going to come out of a designated fund.
We did,
And,
and then the budget committee put it back in. That's why there's a discrepancy there.
okay, and well, I guess, why?
That's was their recommendation. I'm not sure
It might have
exactly.
been clear as, that it was a fund that money, it was requested they wanted the sign. We didn't see any reason why not to fund the sign. I'm guessing we weren't made aware, or else it wasn't clear that there was another fund that the $1,500 could have been transferred from.
Did we not change one of those undesignated fund transfers to increase for that sign? At the very beginning of the list. Did we not increase one of those?
Where are you, which,
Under the capital tab spreadsheet, I forget what you called it, Kevin, but where's the transfer of undesignated funds, 20,000?
Capital recommendations.
It was two at the very top. They were covered last year.
the Public Works stream crossing and it's up on the screen there. Is that what you're talking about?
I thought we grabbed that $1,500 from someplace. That's why we voted for it. I may be wrong.
Well, it could, I mean, I was just looking at this. We can, do we know, you have right there, what is the current, fund balance in recreation? It's up there, isn't it? Isn't it like,
20,138.
right. So we could actually, we could make this number, of the assigned fund transfer, we could make that the 9380, and then it makes it kind of a 6 of one, half dozen of the other. It's not money that has to be raised, so we can do that. That's if we want to, if we want to fund the sign, from there. So.
And then, so that was my question on that, because I thought that's where that was coming from, and. so
Yeah,
was
no,
surprised-
I
surprised-
asked Jerry the same question earlier today, and so maybe it wasn't as clear to the budget committee that was the plan.
And then, Jerry, my question for you is, the 15,000
Mhm.
from the administration line, to me, that was a smart use of resources,
Mhm.
because there are things that are going to happen, especially where you're going through everything so thoroughly. Is that something, in your opinion, you can survive without? Because, you've already got somebody coming in to go over past stuff which is coming out, and, I want to make sure that the budget that we present doesn't prohibit you from doing that, because, business, yes, but we also have an obligation to provide the services and make sure we present correct information to the town for not only the budget process, but so everybody knows. And so I don't, if you think you need that to be able to be thorough and have correct information, then to me, that's a battle I would go for, because I think that's important. And as much as, not spending that would be nice for everybody, to me, that is one of the more important things that needs to be addressed.
Well, thank you for bringing it up. If you look at most municipal budgets, they're gonna have a contingency line in your budget. We just got Androscoggin County. Not each department, but there's like 3 departments that have a contingency line, and it's there for unforeseen things that happen. So 2 months on the job, when I found out that the statements weren't getting reconciled, I had to hire someone to do that, and it was an accountant. Well, I didn't have an accountant line. I had a legal line, so it was like, well, this passed the straight face test. So I paid it out of the legal line, and they're still working on it, so that will come out of that line this year as well. But it just goes to, show that not having a line for those things that are unforeseen, it's risky, because if something else were to happen, where do you get it? So I'm gonna keep beating that drum. I mean, we haven't had it before, so I'm kind of willing to give it up and hope that, maybe the budget committee will understand that it's not a fund where you just spend whatever you want out of it. It's for those unforeseen things. So I think we can get by without it this year. We've gotten by without it before, but it's something that we need to consider moving forward. I mean, the municipality that I worked at, every department had a contingency fund. It's just fundamental municipal budgeting is all. It's not a line just to spend willy-nilly. It's there for a reason.
I think it's good practice to have it.
Absolutely it is.
Yeah, it's MMA. If they have a list of like recommended articles, so that the board has like legal permission to do things like, assess taxes and borrow money for TANs, and stuff like that. And one of their recommended articles is a contingency article that basically says, empowers the board, to whatever amount you put in the article, $10,000, whatever, to use as they see fit, and that was out of undesignated, and that's really for anything within the budget. And and we tried to do that a couple of years ago and couldn't get the budget committee to support that. So we might make sense to take another run at that next year, because if you think about it, that's actually a more cost-effective way to do it, because then you have one contingency that you have a lot of flexibility with, rather than having to build in contingency to multiple articles, which you very unlikely to need contingency in like every article that you have a contingency fund. But if you have one contingency bucket that you can use anywhere that it might be needed, then you have to fund less contingency overall, right? So, but that's a next year discussion at this point.
Yeah. And I don't like using the legal line for anything other than legal representation, and you never know what is going to happen.
Having more of those consent agreements.
Right.
And I think we talked about, we can change. I think we're going to change that to legal and professional services or something
Yeah,
like
just
that.
professional service. Then it would cover both, and
Right.
I think we'll be okay. But you just don't know.
It's really not. I completely hear what you're saying about, you want to have like the right line, but really the line that matters is the bottom line. As long as you're within the total of the article, then I think what you did more than passes the straight face test.
Right. I mean, if legal representation comes to $15,000, it's going to hit that line. We just don't want to go
Right.
over the article.
It's
I
just
get
like
that.
it's just like with the election
Right. Payroll.
payroll. We're gonna spend what we need to spend to do the elections,
Right.
and I think it's very likely we're gonna see an actual over budget next year. Because the town clerk was texting me during the meeting while the budget committee was having that conversation, saying, "Well, yes, there's not a gubernatorial election, but there's still 3 elections, and you still need your people there, and all this other stuff." And
Primary.
So, but yeah, there's a primary.
One thing goes wrong with that and they're gonna be here all night. They're gonna be here the next day.
So, but the thing is, again, it's a bottom line budget, so, and it'll be a learning, like maybe, that way we'll post it as it really is, right? And so we'll see, okay, yeah, you know what, we were okay reducing that line, or what, you know what, we weren't okay reducing that line, and so let's do it differently next year. So.
And then my only other question, there's been talk at these meetings and elsewhere, Public Works, Fire Department, everything's operating well. Concerns about the hours of operation here at the town office. Is there any way in this budget that you can open this office?
More?
Wednesday.
Yes.
That's part of your
Wednesday.
plan, right?
It
That's
is.
Okay.
Part of the plan is to open Wednesday.
Did you get back?
So the part of the plan is to work the staff 36 hours and have window time at 32. Right now, we're currently at 27 and a half window time. So,
We had Wednesday for a short time, and it was popular.
it bothers me that all of our cars are here on Wednesday and people
And
pulling
you
in
can't.
thinking
Yep.
we're open, and then they turn
It
around.
never used to be like that. It used to be like if you were closed Wednesday, then there was nobody
Right,
here Wednesday.
Right,
Yeah.
and that makes
Yeah,
more
once they see
sense to me.
cars.
You guys all park at the school and walk around.
It's bad for you.
All right.
And
Joe, did you have some
yeah, I
comments?
mean, as far as that goes, no, I mean, I agree that we should have a contingency line in there.
Yeah.
It makes the most amount of sense for, given the latitude for incidental things that come up that need to be taken care of, though you don't have to run back to everybody and ask for permission to
Yeah.
fix a very simple thing, or a simple item that comes up.
Yeah, I tried to make the argument in that meeting with the budget committee that, well, I get where they were coming from, because, the administration line is percentage wise is a big, and dollar wise is a big increase versus LY.
Right.
I mean, there's a lot of,
A lot of changes.
I'm more than comfortable explaining that on town floor. I
Yeah.
mean, there's a number of reasons that line up that explain it, and that, but I'm losing my train of thought.
Yeah. No,
Well,
but-
I'm sorry.
No, sorry.
I was gonna say, to get to your point about going with the unified recommendation, my only concern is the Public Works Capital Reserve.
I was gonna say something.
Because I think, to me, you just heard the professional talk about putting money away,
Yeah,
and that's,
It's a double-edged sword.
It is. I
because
hear
It's
ya.
like, do you put it away or do you borrow it a lease later, which is, we've talked about that. And then, I'm just looking at, there is I've got the from being in the CIP, I've got the 5-year plan of what's coming up over the next, 4 or 5 years. And yeah, in a couple years, unless you start putting 100 away every year, you're going to be short, and you're going to be asking for more than 100 on that third year.
right.
And that's going to be a hard pill to swallow for folks. And it's just to maintain the older trucks that are going to go and age out. And there is a plan, which, the accountant said, loading that plan in and level loading the budget over time
Right.
makes it very constant for folks. I mean, even
Yep.
like you mentioned the other day, the mill rate's been constant, right?
Yeah.
People's taxes have fluctuated a little bit due to, real estate,
Homestead
mostly,
exemptions.
homestead exemptions, et cetera, but not because the town
Not because the mill rate's
overextended.
gone
It
up.
wasn't because the mill rate went up. We didn't, we've been trying to level load it, try to keep a balance there, try to buy a truck every few years here on the schedule.
But the thing
It's hard.
the thing is though, and I generally agree with that, and I could go either way on this one, but there's two things that kind of lean me towards like not being that upset if it was the $50,000 number. One is that in terms of ranking of the CIP committee, it's at the bottom of the list because
Yep.
this stuff is on the list here, except for the one item that we didn't even put on the list, the generator for town
Right,
office.
right, yeah.
So this was technically next to last.
Next to last, yeah,
Um,
it was.
But it's last among the things that we're actually considering. And to your point, Joe, it's like, we don't have a plan, right?
Right.
We don't have a financing plan. So my point is like, we shouldn't get too bent out of shape in the absence of a plan. I mean, I think I was very intrigued and I could almost feel like, okay, we can get this, with the conversation about the help in planning out the capital plan and how to fund it and level it. And I think once we have that and we go to the town and we say, look, we have a plan and this is what it takes to fund the plan, versus now it's not even back of the napkin. It's like, it's kind of a wing and a prayer, right? I mean, it's really, what's it based on? It's a number Calvin came up with.
Yeah,
Well, it's based on the projection.
yeah, I mean, this plan is what, and I'll say.
But it's also based on a purchase. There's no, it's not consideration of, maybe it doesn't make sense to purchase that truck. Maybe it makes sense to lease
I
it.
agree. There's other avenues to go and obtain this money at maybe better rates and better return on investment. I don't.
I'm just playing devil's advocate. I'm not, like I said, I'm on the
That's fine.
fence on that one. I could go either way.
No, and I agree that if we can make the numbers between the two committees the same, that does stand up way better on the town floor. The optics are way better that way.
The only thing the thing that I'm not, that I wouldn't, on the operating, where there's operating differences, I feel I can very clearly stand in front of the town and say, this is why our number's different and this is why I think you should vote for our number. I can't do that on that capital reserve number because
Right.
I couldn't either.
maybe it's an educated
No,
guess,
right.
but it's a guess.
It's something you
It's
are
a- it's a
likely
guess at
going to
best.
need at some rate in the future. And likely if we don't start planning now, you're gonna need more coming up. Whereas if you do it now, it's a less of an impact. And to me, that's
Yeah, that's
That-
all
that's
very
a-
true.
that's
all very true.
to me, that's persuasive to say, I don't mind my taxes going up to cover that now. So that we have it, and we're not going up double, triple that if the need arises, which it
may anyway, right?
right.
Once we have an actual plan.
But it's,
Yeah.
but it's going to happen, but this will slow it down minimally. And to me, I think getting ahead of the game is important. Look what happened with the roads, right? There was not that planning. And I remember the first town meeting I went to, and I said to myself, I'm not involved, I've never been involved in town government. Even I know you gotta do this, right? And here I am, some, 30-year-old, never done this, right? And to me, it's very similar, and I think it's a slippery slope, because then we're gonna come down in 2-3 years and say, hey, we need 200,000, 300,000 in that line, and it's gonna be, oh, that's such a big jump, why didn't you plan ahead?
I think zero is an is an irresponsible number, but I don't think $50,000 is an irresponsible number, knowing that you don't know what the end game is.
Well, you kind of do know what the end
You
game
do and you
is.
don't.
You know the end game of what the need is, or what the plan, but the end game of paying for it, that's the
Yeah.
piece we don't know.
Maybe we
right?
should be leasing, but is that gonna be that much less money?
Right, even leasing, you gotta still spend money. You're still gonna.
Yeah.
You're still gonna spend a couple $100,000 on a truck. If you lease
There's
it.
so many variables that can come into play over a course of a year,
Yeah.
2 years, 3 years. Just look at how the economy sways.
Mhm. Yeah,
Since I've been
that's
on
for
the
sure.
sport, I can tell you, it's gone from one
Yeah.
extreme to another.
Yeah, right.
I mean, I will say that, he doesn't have I'll say a huge, I'll use that loosely, till like 2026 is when I believe you have a large truck coming up. But you do have a
Public
couple small ones in between. Was that for
Public work.
Public Works? Yeah. So, I mean, that to me is your big hitter. When you start talking about $280 or more $1,000 for a truck in 3 years, and you got how much in reserve now?
Yeah.
100 and
See, that's where we need the expert help is
that's,
to,
we do.
is to
we
plan
do,
that
but
out.
It I just want it to be open kimono that, I'm not sure that, the 50 is enough right now to not see a spike later.
Right. Gary?
Yeah, I just want to point out that in one article in Public Works, we're asking to pull 50,000 out for the stream crossing. And then in another article, we're putting 50,000 back in.
I think what 50,000 was added because we didn't spend it.
So which 50,000 are you talking
The
about?
stream crossing.
Yeah, what you think it's what?
Wasn't that there because we had already put it in there because we weren't able to spend it, and we're just pulling it back out.
No, this is a new,
Yeah.
we
This is
spent
a-
that 100 on the one culvert.
Right.
The first one.
The first
I'm talking the one the two from last year that we didn't get through.
We got one.
We got one done.
And all the money was went to
Right.
that one.
Right. So you needed another 50 to do that.
Right, this is new money,
Right.
that 50 for
So
this
you're,
culvert.
you're taking 50 and adding it to the 100 you put aside.
Right, so it basically, that keeps, keeps it flat. basically.
It's kind of.
And so it makes no progress on, I mean, so then I say, hey, I look at that, okay, so then that actually argues in favor of the 100 number in my mind, because you're,
Flat funding. it, basically.
Yeah.
well, flat funding it with the 50, I was gonna say with the 100, you're building it up a little bit.
Right.
Whereas if you just do 50, you're not building it up at
With
all.
100, you actually put 50.
Yes,
Which
yes.
is what-
Net
which is what you're
addition
putting
of
at
50,
Yeah,
right.
Right.
Which is
Whereas
what the
if you-
budget committee wanted to do in the first place, was to put 50 in, right?
Well,
Well,
but
they're
the
putting
net
50 in and
result,
taking it
but they're
back
taking
out.
50 out.
Oh,
So the net result is 0.
So,
But if we want to increase the public works reserve balance, then it needs to be a number higher than 50.
Right. That's,
Doesn't have to be 100, could be 75,
What's the balance after that 50 is
I don't know, do you have
Well,
that?
what's that
what is in Public Works
right
capital?
now.
right now? 218,950 right now.
is that prior to us buying this new truck?
That's after.
Yeah.
It's gonna go down a little bit because there's some surcharges
So
with
we
that
got
truck that's not figured.
$250,000 in there if we added 50,000.
Pretty much, yeah.
Well, and then we take, is that end of 22 number? Is
And
that
that
what-
22, 12/31/22.
Okay, so we'd have to take the 50 out, put
Mhm.
whatever
So
in,
So we still have $220,000 in there.
yeah.
Which I don't think is crazy. It's
No.
20%. It's more than 20% of your operating budget. It's right around 20%. I mean, that's not
Yeah.
a bad nest egg.
Nope.
Most people don't have that in their own personal lives sometimes.
And I think it's responsible to do that, especially Public Works and.
To
and
do
fire.
the 100, is that what you're saying?
Yeah.
Responsible to do the 100?
So
I think so.
So does somebody want to make a motion on that so then we can actually formalize the discussion and take a vote on it? Does somebody have a motion on what the select board is going to recommend for Public Works Capital Reserve
or is it,
contribution?
or would it be a motion to change our original?
Well, we haven't had a formal vote on any of this, so we need to formalize. We did a consensus recommendation because we were all in agreement. If we had not all been in agreement before we sent it to the budget committee, we would have had some votes then. But we were all in agreement on the initial recommendation, knowing that we would do the formalized one after they met.
So I would make a motion that we adopt the budget committee's proposal for the operating budget and the capital budget, but for the public works capital reserve, and we make that number 100,000 instead
Oh,
of.
so you're going to do the whole budget in one motion? Wow, okay.
I don't particularly like the, I will be the first to admit, I do not particularly like taking out that 15,000. I think with what Jerry is doing, having that money there as a safety net in case something else.
Okay, let's save that for the discussion. Let's get a second on the floor first. Is there a second? The motion is Are you seconding it?
Say it again?
Okay, I think the motion is to adopt the budget committee's operating and capital expenditure recommendations in total, with the exception of the Public Works Capital Reserve, which our number would be 100,000. You say you seconding
second
that?
that.
Okay, I want to clarify that the way that motion was worded, it does not, there's still other stuff we need to vote on in terms of
Mhm.
undesignated. That's a separate
Right.
discussion.
Yep.
But in terms of operating expense, on the expense side of the budget, that's the most, okay. Discussion. So that means that we would adopt the 535,924, the 9380, the 338,920, and the 372,540. And then by this motion, we would stay 100 and they would be at 50, and that would be we'll duke that one out on town floor. So, okay. Any further discussion on that?
The conservation line,
Oh, that was coming out of the designated fund, right?
I'm gonna,
that's what I'm asking.
so what,
Where are we
basically the
putting that?
revenue, the assigned fund transfer would be, oh, wait a minute, hold on though.
I mean, I'm all in favor of having a new
So
sign.
the budget committee, the budget committee's given their recommendation on this article right here, which only has 7880 in it. If we, and it's worded as a yes or no. So it can't be amended on town floor. So we can't,
Change that number.
is that the one you were talking about?
Is it 9380, right?
Yeah.
Yeah,
Oh, if you did that, then we're golden.
yeah, that's what that is.
Okay.
Their
then
budget
that's-
number is 9380.
Yeah,
Yeah.
right.
no,
That's what I
You
was
just
saying.
need to.
Thank you. Thank you for pointing that out, Don.
All right. I tell you, if I get ambushed by people on your committee by changing that number.
I can tell you tomorrow. I have it done.
Right behind you.
I guess, right.
There's an extra 8.
Just get it over with.
Oh,
You won't get
you can't get 93,000 out of
That's
it?
that's my extra 100 I need.
Okay, so then,
That would be.
so then we can do that. And so, all right.
Thank you, Todd, for pointing that out.
All right, any further discussion? So the motion is, we basically accept all these numbers and debt service is the debt service. And all the capital numbers, except we would stick with our 100 number here instead of the 50.
You know, and understand, I being in the CIP committee and seeing what we've asked the department heads to do the last few years, I think they have done a really good job laying out a plan. I don't disagree that some of these numbers are in flux for a number of different reasons, like the market, right? I mean, but if anything, they're underestimated based on what the market.
Yeah, that's probably true.
When these were laid out. So there's it's been, like I say, it's been 3 years we've asked them. It's evolved over time. It's the only way that the CIP can actually make a good judgment call on whether this goes to the top of the list. I agree. It was on the bottom of all the other things. There was a large list this year. But again, I think that we'd be short-sighted not to keep funding that line at this point, because I don't think the equipment costs are going down anytime soon. And it'll be a big upper when it comes time to replace one of these bigger trucks, regardless of how you do it.
Look at that plow truck. It's gone from what did we pay for the last one? 190, 185?
Oh, it was over 2. It was like 220 something, I think.
For the yeah,
The previous
for this
one.
one we have.
Oh, the one before
One
that.
before that.
Oh, yeah, it was around 190, you're right.
You don't wreck nobody.
old Uncle Harry, Joe, somebody like that. We got a deal. Like a fire truck, we got a good deal.
We got a deal. Yeah.
All right.
We didn't get a deal this time.
We always get a deal.
Any further discussion?
If I can just throw in something.
Technically, no.
Yeah, no, it's not-
All right, I'll recognize the budget committee chair.
It's not a technical thing. I'm just thinking, because I can go, I disagreed with the budget committee, so, but I'm just thinking if you wanted to shorten the meeting at all.
You talking about a town meeting?
Want to shorten the town meeting by a few minutes, that might affect your vote.
Well, I think,
That always affects my vote.
So, I mean, there'll be quite a bit of discussion.
You know, we could,
I'm not saying, I'm just throwing that in.
I like the idea and I understand the spirit of, Jerry, with us being in simpatico with the budget committee, but in the same token, there's part of me that says that's really not what this was designed for.
it's good to have spirited discussion on the floor. Sometimes.
there will be plenty of time, opportunity for spirited discussion
Plenty of
on the
time.
floor.
I don't necessarily
I find that
think.
these type of things don't get as spirited and it just moves forward, and some of the other things that you don't expect become
I
spirited.
can't speak for the forefathers of Durham and stuff, but I don't think when you create two committees to try to create a budget for a town that they should try to come to the same conclusion on their budgets. You should give the people options.
Most municipalities will try to get there rather
We're
than
Durham,
hammer it out.
we're
I understand. I'm finding that out.
And I'm not sure, I think it's fair to say that several do, but I'm not sure it's fair to say that most.
I wouldn't say
do.
most. I certainly wouldn't say most.
But anyway, so
I think we're really close here. I think,
You know what I'd be in favor of doing? Taking bulky waste day.
Oh,
Take that $12,000, put it into the administration budget. As
that horse has left the barn.
I know.
That horse is towing a trailer or bulky waste down the road right now.
Just for one, because I know you're part of the CIP committee, and Kevin, maybe you could answer this too, or Mr. Town Manager. What are we looking to have for a healthy reserve in a reserve account with a department of let's say $1 million, just to keep the numbers even, budget? What do you think a healthy reserve is?
I don't think it's related to the operating budget at all. I don't think,
is it-
because it's not a savings. It's not like reserve fund where you've got to have money to cover operating expenses. That's what the,
it's just.
that's what assigned, fine, this is about the determining factor of if it's an appropriate amount or not is like, what are your future planned capital expenditures? And that's what the plan we need help, professional help to put together.
So-
And
So
so,
yeah, I would agree with that, and thank you. So I guess by that rationale, like, what's everybody's quote unquote guess of a number of what it should be?
so it was about $100,000.
That's was my point earlier. That it's, we don't really have a plan yet, so we don't really
So
know.
that's where I have a problem is I'm asking townspeople to commit money where, well, I don't really have a plan for it. I'm just asking you to put some money out of your savings account into our savings account where you get nothing and we might get nothing also, but at least it's there.
I do think though that
So
the
still.
the future expenditures are high enough and the
But
current
all
balance
these
is
other
low
things are
enough that there's
all
no
these other
question
things
that
come.
the money's going to be needed for
Money's
public
always,
works.
yeah, the money's always gonna be needed.
Right, but I mean, but if it was like, if there was already like a $2 million balance in there, we were asking for more money than.
We're in town, Durham, not Colton College.
All right, so guys, let's all have the same discussion. So
Okay,
let's,
sorry.
um,
So, I mean, what Calvin had laid out in the CIP plan was $100,000 every 2 years, essentially, into the budget, which brought you down and funded everything down through 2020 into 2026.
with all due respect to Calvin, he is not a finance guy. So,
I understand, but it's a plan on what he's looking at for capital equipment, what he's seeing for a replacement schedule on these vehicles. So, I mean, that's really all he has to go on, right? Is that he knows that truck that's X number of years old and has so many miles on it and has been plowing salt and rusting out for that many years is gonna die on that year or thereabouts. Maybe he can get a squeak a little bit out of it, maybe not. But he knows that these big ticket items are gonna come up based on the schedule of how long a truck lasts. So that's kind of where I think his numbers came from, looking for that kind of money on a recurring basis every 2
Right,
years.
but
So
what I-
doing the 50, I mean, I guess this year and doing 50 next year gets you that extra 100, but eventually you run out in 2027. You're done.
The thing I gotta say, I'm putting no weight in Calvin's financial plan because it's based on nothing other than what he's looking at the schedule and like a simple math equation, and it's much more complex than that. So I think the fair point there is that we know these expenses are coming, and that what we don't know is what's going to be the most cost-effective way to pay for them. Is it going to be to build up reserves over time or whatever? And really, as Mr. Roy said, the purpose of reserves isn't really to save all of it to buy the thing, right? It's to, as you look at what you're going to need over a long course of years, some years you might need to raise more than others depending upon what the truck is or expenditure is. What the reserves does is fluctuate enough to kind of counter the curve of the expenditures so that ultimately the taxation is as smooth as you can make it over multiple years.
And I think that's what this does, but it is a pretty smooth curve. I mean,
It's a flat curve because it's a simply added everything up and divided it by a number of years. It's just,
well, and not quite. I mean,
well,
but
okay. That's kind of tangent to the.
yeah, but that's just. I mean, I think some thought was put into it. It is a curve that rolls with the years. It doesn't go down quite to zero. It doesn't go up extraordinarily high either. I think it was a good cut at what we're looking at.
Okay. Any other discussion? All right. All in favor of the motion to adopt the budget committee's operating budget recommendations and capital budget recommendations, with the exception of Public Works Capital Reserve, in which the Select Board's recommendation would remain at 100,000. All in favor, raise your hand. All opposed? Okay, motion passes 4-1. Rich voting no. Okay. So the next question is about what amount of undesignated funds to use. So obviously every dollar of undesignated funds we use is one less dollar of taxes to be raised. The budget committee, our initial recommendation was 200,000, but that was before the addition of 16 and then another 20 for gas and solid waste. The budget committee landed at 230, and they were hesitant to be much more aggressive than that. Keeping in mind, there's another 22-ish thousand that would come out of undesignated to cover overages in 22 from solid waste and the fire department. So the total amount of money coming out of undesignated on the budget committee's recommendation is actually like 252 and change, I think, something like that. So, but this is the amount we want to use towards the 2023 budget. So.
And what does that do for our mill rate? Go from.
Well, let me do this. Because we want to have as up to date as so. Right. Okay, so now if we go tax impact, the difference. So right now, the only difference in our budgets is the undesignated fund amount, and the difference in, go to municipal. Municipal, the select board recommendation is this is a mill rate increase, not necessarily but it's not the budget increase, is a 1.2% and 0.3% on the budget committee. So if that number goes to 230, if I've got everything right here, then that number should go to 0.3% as well. And it didn't.
Because we had the extra 50,000.
Oh, right. That's not the only difference. Right. You're right. Yeah, that's what it is. Thank you. So it's the capital so it puts us at 0.9, and they should still be at 0.3. So less than 1%. The thing what I suspect when you see that low of a number, and what we don't have here as part of the calculation is what the updated valuation number is. When that valuation number comes in, at least on the municipal side, it probably shows a decrease in the mill rate.
Should.
And we're probably going to get offset by at least the preliminary, the county assessment, as you can see here, is looking close to 13% increase from the county this year.
I don't get that.
Yeah, right.
building.
So, but still, even with that, we're looking at 3.9%. That's using a school number of 3%, and that I guess that's looking like it might be 4.5 or whatever. But again, even same thing with solid waste, we would only be taking half of that increase this year because of the way our fiscal year falls. So we're looking at, either way, we're looking at I think we're going to end up with a flat mill rate again this year, or very, very close to it. Very close to it.
Because we should be higher on valuation for sure.
Didn't some guy the other night say we should expect increases?
Garages and stuff.
Oh, was that you?
Yeah.
Sorry, what's your name? I forgot.
I wish you could have seen her face when you said that. Oh my God. So anyway, so that's. Did I put I think I put the 230 number in there. So my thinking was originally, and I think I said this earlier, when we learned about the additional 36,000, it's like, well, just add that to, undesignated and funded there. But I'm okay with the 230 number, and not because getting into an undesignated funds conversation on town floor that'll be a much bigger nightmare than a difference in reserves. And I think the budget committee made some good points in that, that we could probably safely do the 236 or whatever, but we don't know for 100% for sure until we get a little bit further along in the audit reconciliation process. I mean, I still think we're being fairly conservative with this number, and it should still leave the unassigned fund balance, well over the 1.6 million, which is on a $10 million budget. That's before that's total expenditures before any revenues or anything are taken out. You're at that puts you at your 16%, which is a comfortable level to be at. So. Operating versus capital. So that would be my recommendation is to match the budget committee on this one at 230. But
We did
that's what I have entered there, just so we can see what the numbers worked out as.
If you're looking for a motion, so moved.
Is there a second?
Second that.
Joe, second. So the motion on the floor is that our recommendation would be to use $230 in unassigned fund balance to help offset property taxes raised for the 2023 budget.
230,000
What did I say?
Dollars.
dollars.
$230? $230,000. Yeah, it's after, it's getting pushing 8:30. All right, $230,000. All right, any further discussion? All in favor? All right, we have 5-0 on that one. Okay,
I do want to say, you know, as town manager and for the record, I did agree with Milt's explanation on taxes and doing it incrementally and can't stay flat forever. So.
oh yeah, that was one of his arguments.
Yeah, it was. I heard it. I watched it and I'm like, you know, rather than hit them all at once. So I just.
Okay. So the other thing, in terms of our recommendations that we need to vote on are the funding and, the funding articles. So there's two here. These are the two articles for where we overspent in 2022 and basically asking to fund, pay for those out of undesignated. And then our capital budget articles, you know, these are the, thanks, Neil. A lot of these are, thank you, Bill. A lot of these are a yes or no versus an amount. And then funding articles, this is where what we're doing a little bit differently this year. This is where, so we just talked about the one where we use undesignated. This one basically authorizes us to use all the revenues, all the stuff on this tab, you know, to offset taxation. A lot of times these are estimates, so could be higher, could be lower. But we'll know that by the time we get to commitment, we know that. Whoops. There we go. And then this is the one where, because these funds, telecommunications and recreation, are assigned funds with a specific purpose, and the excess, any unspent funds go back into those funds, we have to ask separately to use those funds. And the only thing we have to watch out for here is that we don't put an amount in here that's greater than the amount of the budget for that category, right? So even though there's $20-something thousand in recreation, the recreation budget with conservation is only $93.80, so we can't. That's the maximum we can use. So. Okay, so and then the debt service article, you know, we're gonna pay our debts. So.
Yeah. So moved.
So the motion on the floor, the board recommend yes to the 2022 articles regarding overspending, yes to all capital budget articles with the amount for the assessing the market valuations reserve at 60,000 and the amount for public works reserves at 100,000, and the 230,000 for unassigned fund balance to be put towards taxation, and a yes on using government and intergovernmental revenues, and 9380 from recreation and 52,000 from telecommunications towards those funds budget, and yes to funding our debt service. Was there a second to that? Todd made the
I'll
motion.
second it.
You made the motion, right?
Yeah, so moved. Yes.
All right, and
I'll second.
Joe second. Any discussion? All in favor? Yeah, we are 5-0. All right. So I believe that takes care of all of the board's budget recommendation, the budget article recommendations. So at our next meeting, we'll get into our recommendation, well, basically our vote on the ordinance change articles and the business articles. And one thing I wanted to put out there on the ordinance thing, like we said in the email, is that, you know, so the public hearing, the first public hearing is tomorrow. And so we've had the specific proposed language of the ordinances out on the website for a little over 2 weeks, to give people a chance to read what it would actually be. And then tomorrow is kind of intended as an opportunity for people, having read the language, if they have concerns about it, to come talk about that, and then any other concerns they might have, or questions about, doesn't have to be concerns, questions about the proposed ordinance changes. And then coming out of that, what the town planner and the planning board will do is they'll consider at a planning board meeting, if based on feedback they got, if any changes to the language are warranted in their opinion, and then that language will be presented to us at our meeting on the 28th. And our role at that point is kind of a yes or no, like, yes, this is ready to go to town for a vote, or no, it's not. So but what we shouldn't be doing is editing the language ourselves, because then it's kind of come out of the public hearing process and there's no opportunity to make a change out of that. So
So it's just an accept or reject.
on the 28th, yes, yeah. So and we all have an opportunity to, like anybody else, to go tomorrow or express it some other way to the planning board, via email, or call up John or whatever, but or George, the town planner, if you've thought of something that maybe was overlooked or whatever. So okay. What else? So I think that's it. Am I forgetting anything?
I don't think so.
All right, so we're done with our budget articles. Next on the agenda is the consent agenda. I would take a motion on that.
Move to accept the consent agenda.
I'll second it.
Todd seconds. All in favor? Unanimous. Okay, upcoming meetings. I think I just mentioned the public hearing on February 15th. Have they landed on a firm date for the second, official pre-town meeting, public hearing for the ordinances? I know they were running into trouble scheduling.
But I think they are okay. I think we are.
We don't know for sure, sitting right here, what that is. Okay, so people can keep an eye out for that. That'll be later in March.
But
It has to be,
I think it's March 15th.
15, that's what I
but
think.
then I thought they ran into trouble on that date for some reason, but anyway, we'll confirm it and make sure it's on the website calendar. And then our next select board meeting is February 28th, and then again, March 14th here at the town office. And we do have an executive session that we need to do tonight. And this is signature on the warrant. So I'm going to move that we go into executive session pursuant to 1 MRSA 4056A for the purpose of discussing the town manager's 6-month probation period, which ended about a week ago. Rich seconds, all in favor? Okay, we're in executive session. All right, take 5.